know and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. The first chart today is from one of our listeners and ask a question about the stock of MGNX. I don't know if it's Magnavox or not. That's the only name I could come up with. Anyway, he had bought the stock considerably lower. You can see when it made the, I guess it was when it made this Gartley pattern down in here, and he's asking the question, where do you get out? Well, that's an AB equals CD, and it's absolutely perfect in price and time. In other words, from the low to the high, you can see here from the low to the high is equal to the low to the high here in both price and time. And so you have two choices. You either get out here or you put a trailing stop in. And my suggestion to you, young man, is to put your trailing stop 4 cents under where it's trading right now. It's trading at $6 and something. So put your stop 4 cents under that. That is sort of a comical way of saying, get out of Dodge. This puppy is over. And remember, if you look at this on a really long-term chart that I don't have, this is just a big ABCD in a very, very, very bearish market. So get out of Dodge on that one, boy, or Mr. Wyatt Earp will be looking for you at the OK Corral. And, of course, if it goes up from here, we'll blame somebody else, but don't blame me. Anyway, that's what we're watching here today on that particular stock. A lot of things are happening, folks. The only green things that were happening today were in the let's try it again, Larry. We're in the energy markets. Let's start out here with the natural gas. This has been a really big screamer to the upside. And then you'll notice here today, starting yesterday, actually, we began to start to weaken. As you can see here, we had the big ABCD right up here at the top, and then we come down, we make a beautiful 382 retracement right to the tick, and we come down, break really hard, make another 382 retracement, and then now have come down to the 1.618. That's one of just several in the markets for energy that have been negative today. The other one that we were able to get involved in was of course, the crude oil market, because the crude oil had done what we like to see it do, and that is to make what we call a really nice 382 retracement on the daily chart. And we'll bring this one up to see you right here. And there we go. Here's where we are right now. And you'll notice this is where we are. We hit the exact number here. We went up above it by 2 ticks. The number was 91.66. We hit 91.68, and now we're coming down here, getting ready to take out these. In fact, we've already taken out these lows. It has a substantial profit in it, so you'd want to be at a break even there. However, we've had some monster moves in the markets of gold and silver, as you know, and by golly, I'll tell you, it's going to be real interesting to see what happens as we continue on here. I wanted to just quickly, before we get to gold and silver, because I have this on my mind and someone's asked me a question about it, and that is the British pound, because we're seeing some really strong moves here based on the same thing, the 382 retracement. You can see the first one here was yesterday. We pointed that out. We had another one last night coming exactly at the 382 retracement. I mean, this market is screaming to the upside. It's just having some, really good follow-through to what's happening to our election. So evidently John Major's coming back, and, maybe even Bill Clinton will be part of Congress next year. Anything could happen in these markets, folks. And as Mark Douglas used to say, anything can usually happen, and it most probably will. So get ready. Now, I do want to mention my guest today will be Rich Anderson. We're going to be talking about the market from 2016, also a little bit about the grain markets, and we want to be able to talk about these with his perspective, because he's extremely good at what he does. But let's get back to where we are. Now, this was the number we were looking at yesterday. I brought this to your attention because I thought that it was going to be, very, very important, and so far it has been. You'll notice here that yesterday's low was an exact 382 retracement of the low that we made right back here. If you remember last Thursday, we came up Friday, we went up here Friday, we came down Sunday. Okay, we completed the ABCD. The move came down to the 382. It did not get one tick below it. It went to it and stopped. And from then, if you just do the measuring, boys and girls, let's do something different together. You take A plus B, okay, A plus B, and then you say minus C. So you A plus B, put that in parentheses, then minus C, and that'll equal D. And if you want to see where the market's going, why don't you take a look at that? Remember what happened on election night 2016? Well, maybe things will be a little bit different. Maybe things will be the same. I don't know, but watch those numbers. I'm a number person, and just pay very, very close attention to those numbers, because those are the ones that, they're the ones that help you. Now, the Dow Jones is going wacko to the upside. There's absolutely no question about that. That started yesterday, if you want to take a look at this. And we mentioned that the Dow Jones only being 30 stocks, of which it's only about 7 stocks, because those are the ones that are, price weighted. The rest of them don't count very much. How do you, some of these just don't even count at all. But anyway, you'll notice here that we're already above that high. Remember, this high right here that we made a week ago Friday, that's where we were when we were at 39.28 in the E-mini S&P, which is a 382 of the whole move to the downside. We're still at 38.60. So at least that was a high a little bit earlier ago. So not much has changed there, but we're having some big things happening. Now, I wanted to mention one other thing about the emotionalism that's going on in the market. I've been watching Bloomberg this morning just to see a feel for what everybody's thinking, talking, whatever they're talking about. And it was amazing to me how many people were talking about the bullish chart for Apple. And I said, well, I better pull a chart up for Apple just to see what it is. And folks, I want to tell you something. If anybody can tell me that they see something bullish about this Apple chart, other than the double bottom, I do see the double bottom here. I'm not that blind. But look at this thing. I mean, we rallied to 50%. We come down. We've made a double bottom. And look what we've done. We haven't done hard. This is a dead cat bounce. And the cat is sick at that. Boy, if anything bad news happened to these markets, this is going to be the first one to go down, because this is not a bullish chart. Hello, operator. Well, at least I don't think it is. All right, guess when it's 200, I'll say, yeah, it was bullish. But anyway, that's pretty much it. Stay tuned, folks. I've got some charts from John Cheveney, Mr. Z, from the Tigers Trading Den, that is going to knock your socks off, because I'm not even wearing socks, because it's already knocked my socks off. But I want to share with you a couple of charts that he's looking at. Take it for what you will. No matter what, we're going to blame it on John if it doesn't work. And John takes it like a man. He wears steel-plated T-shirts. That's how tough that dude is. Anyway, we're going to be sharing these charts from John Cheveney when we come back from the break. And if you trade stocks, you want to pay attention to this, folks, because John does his work, and it's worth every second.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart here from John Shervany out of the Tiger Den, and I wanted you to take a look at it here because it's very, very informative. And if you look at this, you'll be able to see here, this is 2008, folks. From the high, you'll see we came down 160 days, and we made that beautiful double bottom in here. And then, of course, the market started to rally. Okay, now let's just go forward in time, just like what John is trying to show us here, because I think the things that he's looking at here are incredibly informative, especially if you like 160 days. And if you just add 4 days, you'll be at 164 days is where we are right now. And you bring that up and you'll be able to see it. And this time we don't have a double bottom. We bottomed here, and now we're in the midst of making a rally in here. Now, what's really important about this, you'll notice how John has lined this up so that let's make a case for what might happen next. And we're not going to hold him responsible for this because, you know, I take responsibility for everything that goes on here on my show. And I respect his work as much as anybody I have ever met in this business, folks. And believe me, I have met a lot of people. Okay, so let's pay close attention to that. Now, let's take a look what happened back in 2008, okay? Because remember, the bottom didn't come in until March of 2009 on March the 5th, if you remember. Now, look what happened. After we made that bottom, we rallied up. Look at that, folks. Can you believe that? How many times did we rally up? We rallied up 63 days. Well, let's just see where we are in the context of what John is showing us right now. And let's get moving here. And we're going to get it up here because this has already happened, folks. We've already made that. This is why I have been talking about that day of when we got to 39. This was our 39.27, folks. If we get above 39.7, I don't care if it's the election, inflection, whatever it happens to be, this market is bullish. Disregard the Dow Jones, folks, because that's a price-weighted index of about 7 stocks. So just don't even think about that. It's just like looking at the NASDAQ on the 10 stocks that are in the NASDAQ. So if we can get above that, then there's a big difference here right now. But if that's the case, then we've already made the high. And what we're seeing now is emotionalism in the market for the stocks based on the election. Now, how much is it going to be up on election night? I don't know. But, we've already had, one heck of a run here. We're already trading. We're down just slightly from the high, but we're way up near the high. In the S&P, we got as high as 38.70. We're at 38.50 right now. That was a 1.618 expansion, right there. I'd have sold that just because of that. Let's just get that up here, and we'll let the folks take a quick look at it, because I'm doing this live instead of Memorex, and we'll get this up here. You'll see that what we've done here now is from last night, we've made a 1.618 expansion of this move right here. We just hit that at 38.70. But the key level is at 39.28. If we get above that, and we could certainly do that, then this market does have bullish things. But other than that, this is a bear market rally, folks. I hate to admit it. Well, at least my opinion. And, I didn't buy it yesterday and I knew it was going to go higher. Why I didn't buy it? Well, for two reasons. One is that I really had my reservations of whether this election was going to go the way everybody thinks it is. In other words, a red wave. I thought maybe it would probably turn out to be a blue wave, surprise everybody. The risk was very small. I decided not to take it. Now, we'd had good runs in the gold, and we had good runs in the Dow Jones or the S&P on the way down. We did extremely well on that. But what I wanted to do, that fact is, we covered our short right in here early Monday morning when it had that first little pullback. But that was my main reason. I had a real strong suspicion that it was going to go up, and all it was a suspicion. Now, when I'm a trader doing what I'm doing now, it's really difficult for me still after all these years to disassociate the news that I'm hearing in the background from people sending me charts all the time to what I'm seeing on the charts. I really have to work hard to do that. So when there's a conflict, like there was at that 382 retracement yesterday at 37.70, I said, I just soon wait. And so that's what I did. In fact, I was waiting to buy Treasury bonds because I was extremely bullish Treasury bonds. Those of you that have been listening to the 24/7, the darn things have gone up quite a bit today. They're up about 1.5 points, but we're still going to get a chance to buy those. So let's just be cautious, and we'll be getting those down. I want to share a couple of other charts here quickly before we have our good friend Rich Anderson on to talk to us about it. And one is the question that I had about the Chinese market and the island reversal pattern that we have in the Chinese market. Now, this is an ETF for the market. I don't know how they work. Like Warren Buffett says, ETFs are weapons of mass destruction. Someday I think he'll probably be right, but right now you can see here this little red box. We gapped above that, and we've continued to go higher. In fact, all the markets are going higher. The German DAX, even the FTSE, and just all of them are being pulled up by the emotionalism of our election here. For God's sakes, if there's a disappointment, you can imagine where the thing's going to be tomorrow when we come in. But it'll be trading tonight, and I will be there tonight. I am not going to get any sleep tonight, so I'll take a really good nap this afternoon, and I'll be ready, because last time that happened in 2016, that was a very good day. And I happened to be here with a couple of neighbors, and they were also traders, and we were looking at it limit down, and the doggone thing stayed limit down for maybe 5 minutes. And I said, oh, there's your risk right there. And then the results from Florida switched automatically, or not automatic. What am I talking automatically? They switched quickly, and the election started to move towards the red wave. And that's how that pretty much happened. So our guest today will be Rich Anderson. Tomorrow will be Shane Smolian. And then on Thursday, we're going to have Tim Bost. Always has some really good things along. We haven't had Shane on for quite some time. He's got some good charts for us tomorrow. Friday, I'm still working on a guest, and we'll hopefully get those folks lined up for you to keep it going. I do want to share one other chart here. Part of this is what's going on is here, the currency markets, and one of the big ones in that, of course, is the dollar yen. And that's been a screamer, and all we're seeing now in the dollar yen, folks, in my opinion, is getting ready to make a 382 retracement down here. at this level here, which is around, I believe, 141 or something in the dot. You can see it right there in the chart. That's right there, and it's a beautiful ABCD. It matches the retracement that we had here. You can see how the similarities are. They're just, if you just drew a parallel channels, folks, you can just see the parallel channel here and the parallel channel right here. That's just in a parallel channel. It's got to hold here, though, because if that Japanese yen goes below by more than 40 or 50 pips, you don't want to be in that Japanese yen. You want to get out of the way. Hey, let's take a break. We're going to be right back with Rich Anderson, Anderson Capital Management.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Rich Anderson on the line. Rich, how are you doing today?
Doing great, Larry. Good morning.
Rich, let me ask you, how's your memory from 6 years ago? Do you remember being limit down and chatting? You and I were chatting on the phone when it was limit down right before the Florida election changed, and we said, well, probably ought to take a nibble at it here if it comes off a limit, and it did, and it never looked back.
My wife and I decided to leave the victory party and head home because it was time to start buying. And
yeah, guys,
that's
certainly
that's
what
why
a day.
I sent you those 2 charts. I don't know if you got them or not, but
yes, I did. I posted it in the room there, but I remember watching it because I was besides being on the phone with you, I was chatting with Byron, and then they had another trader friend that was here. Friend of Mark Douglas was visiting. And we were watching as it started to creep up, 25% off of limit, 50% off of limit. And Paul said to me, he said, "Boy," he said, "if this son of a SOB," he said, "if this gets unchanged," he said, "you better look out at what's going to happen tomorrow." And that's exactly what happened. And it was a big deal. Are you seeing anything like that now? I mean, I'm a little nervous when I hear about these red waves. I don't believe the stuff that's in the news because I don't believe politicians, and certainly not poll takers or anything like that. What's your feeling, Rich?
Well, I don't think there's any question that the Republicans will take the House. That's almost locked in. If they didn't, that would be a shock, and you sell the world. But because we've had too much fiscal spending, excessive fiscal spending, that's frankly the cause of this inflation. And as Larry Summers, who was Secretary of Treasury under a Democratic administration, he believes that the interest rate hikes that we're seeing hasn't caught us hold as much because a good deal of the inflation has to do with the excessive fiscal, not the monetary stuff of the Federal Reserve System. But keep in mind that, we're now in quantitative tightening, which we're not really tightening. We're just, letting the stuff roll off. Mm-hmm. But look back to an midterm election year of 2018, because all I'm reading about today is, if we get a split Congress, it's very good, and the average rally's been X. Well, nobody seems to remember that in 2018, we had a midterm election. And indeed, we did get a 2-day rally, but then we started to sell off. Then we had a nice little more than a 78% retracement, and then sold off into the December 18th. And that's when they stopped the quantitative tightening back then. So, I mean, you've got the guys like Mike Wilson of Morgan Stanley, who I think thinks that the corporate earnings will be down consequential in the next year, but he was still talking about playing for a rally in the short term. But I take a bigger focus. But the key is you have to know what your edge is, and I think I know my edge. You have to know what time frames you're looking at. You look at 2-minute charts sometimes, but you got to see the forest from the trees. So if you're looking at a 2-minute, you have to be looking at a 15-minute. And if you're looking at a 15-minute, you probably should be looking at hours. So the longer term one tells you the where, and the shorter term one tells you when to enter and how much to risk, in my opinion. That's the way I see it.
2 minutes now is a blink of an eye. You can't even really use it very much, I imagine. 15 minutes is as small as I look at.
And Jim Bianco has a real nice data point that he puts out probably every week. And I sent you on Sunday the one where he had a chart of the expectations for the increase in the Fed funds rate in the December meeting was 0.75% was over 80%. And then Wall Street Journal's economist sent a tweet out, Nick Timmeros, and within minutes, the market for the probability that increase of 75% going to 50% was just instantaneous. And that's because we're in an age where we've got these algos and these prop shops. Everybody's watching the tweets, but the computers and the algos are watching for keywords. And as soon as they see one or two of these keywords, they start putting on positions, and then it just gets the ball rolling. And that's why you got to use stops. I mean, you know what your risk is, because these markets can take a good week or a good month and take it all away in a few hours if you don't use stops. And that's the secret. So you got to structure your risk intelligently.
That's for sure. And when these algos, if you think that they're not using these same numbers that we're using, the numbers of, the Fibonacci sequence and the other numbers of sacred geometry, they certainly are, because that's where these markets turn from. You see that day after day. So you've got to be at least aware of it.
Absolutely. I mean, take Jim Cramer's talking the other night about Carolyn's, technical stuff. Well, she was one of your students that I met back in the 90s.
I remember. Yeah, she was on the floor of the exchange.
I just get a kick out of that. She's a real
she
nice
was a
lady,
runner.
by the way. I always liked her.
She is. She's a sweetheart. She's a really nice lady for sure. But all those numbers are, people know what they are, but there's so many different numbers that, we only use 4 or 5 that we can see. But these algos people, they have huge computer banks. And, they were trained, most of them were trained at MIT by, Andrew Lowe, and he's certainly been into these numbers because he's really big into astrology, and this is where these numbers come from. And in his book, Evolution of Technical Analysis, he spends 2 full chapters explaining why the first technicians were astrologers. And, of course, it's all related to mathematics now from the way we look at it, but it all fits together. So I think it's important that we pay attention to these, but you got to use stops. Because if you don't use a stop,
the 3 wise men were astrologers also.
Yeah. What? Yeah, was it Larry, Curly, and Moe? Were those the 3? No, that was the 3 of those are the other 3 guys. I'm sorry.
Yeah.
Yeah. I shouldn't make fun of that. Oh boy, I think. Oh my goodness. Someone there's a lightning bolt over my head right now. Please don't go off while I'm on the air. I didn't mean it that way. Hey, listen, buddy, I know you're really busy today, but thanks for joining us. And I'll call you tonight at midnight, and maybe we'll do some trading, okay?
All right, sounds good. You take care.
I will be up tonight, that's for sure.
Yeah, and some of these races are going to take a long time to call. And the truth of the matter is, the Georgia race could last. There could be a runoff election in January. The Pennsylvania race, it's going to be crazy. And so every time there's a tweet or a news flash, it's going to cause these markets to run up and down.
That's for sure. Well, it'll be exciting to say the least. I'll take a good nap today if I can sleep this afternoon and be ready, Bill. I'll be ready no matter what. Hey, buddy, we'll talk to you later, but thanks for joining us. We'll have you on in a couple of weeks. Oh, Rich, one more time. There's a big grain report today. What's
that's tomorrow. That's tomorrow.
Tomorrow. Yeah.
There's going to be it's not going to be a big deal. There'll be very slight changes. Most of the focus will be on demand. And by the way, China bought some corn and beans today. Mexico bought some stuff, but our sales are way behind, and expectations for sales for this coming year are not going to be great. And so they might tweak it a little bit, but it'll be very minor tweaks in the market. That's a non-event as far as I'm concerned. The next event will be when we get some weather in Brazil and Argentina. Looks like Brazil is going to have a great growing year, but Argentina may have some significant dryness problems, and we have dryness in the Southwest in our winter wheat. So you have a good day. Enjoy.
You bet. Thanks, Rich. We'll talk to you soon.
Bye-bye.
Rich Anderson, folks, 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this next chart is brought to us by our good friend Tommy the Trader Hugard, and if you'll notice here that we are in the upper band of the 382 at 13,600 and something here in the DAX index, so it's going to be very, very interesting. If you'll notice here that these waves are exactly equal, in other words, this swing right here is equal to this swing right here. That makes it a parallel channel to the downside. I mean, the trend is still down. This is the 382 right here. Here is a 61% retracement, and there is a 50% retracement, and there is a 382 retracement. This lines up to 4 numbers saying it should be a correction coming here in the German DAX. Will it be related to what's happening in our market? Don't really know, but it's been pulled up by our market, and it's done its own thing too, so that's neither here nor there. Okay, now let's move on to a couple other things that some people have asked about, and I'm going to try to answer their questions. And, maybe I can, maybe I can't, but all I can do is to give you my best indication of what I think is happening, okay? Now get back to that chart here on the Japanese yen, because this is really an important chart, folks, because Japan being one of the G7 countries, even though they've had a lot of problems lately, since 30-some years ago when they topped in 1999 on December the 30th. But you'll notice here, this is a perfect ABCD at a 382. Okay, now again, it's equal to this move to the downside, just like we just saw in the DAX. You'll see these are equal, coming right down. So if we get down to this level here, especially tonight, you want to be watching that, because the currencies are fun to trade. They're not influenced too much by the Fed, and they're huge markets. The euro market is bigger than all the stocks and bond markets combined. That's how big it is. They do $1 trillion a day just in the euro versus the U.S. dollar. And the euro versus U.S. dollar has been on a tear the last 4 or 5 days because the U.S. dollar has been under some pressure. We mentioned that this weekend in the newsletter that, the dollar was having some problems and it was not going to, go straight up from there because you can see by the reaction. Let's get this up here so you'll be able to see what we were looking for this week, because you'll be able to see this is what we sent out Sunday, that we were looking for the market to come down at least to this level right here, and we're going to get there. So that's pretty much, we're about halfway there. I believe I haven't updated it, so I don't even know where we are right now. That comes in at around 109, I believe, and I saw 110 trade earlier today, so it's not very far away. So I'll be watching that tonight for sure. By the way, I have some good news, folks, for our 24/7 folks out there. Is I am very, very close. I mean, I'm within a heartbeat of getting this stuff out to you instantaneously. I mean, not an hour late, not 5 minutes late. I mean, seconds away. So I really think I got a chance. I'm just waiting to get to the folks at TFNN to get approval to set it up that way. I think it'll work. I could be wrong because technically, I'm not very good at this, and someone shared with me what I should be doing, and so that was John Jameson. And so I've got a pretty good idea that I can get these charts out to you folks in the middle of the night really quickly, because they're moving quickly sometimes, and when you see them break out to the upside, you want to be getting in because they run really fast. And you know what? Markets that go up really fast, they come down really fast too. So pay very, very close attention to that. Now let's take a look here at the gold market, folks, because we've had one hell of a run here in this gold. Let's get this up here. Boy, there you talk about beating myself in the head. Boy, I tell you, I was doing it again today because I remember we sold this rally right up here, which was right above the 50% level, and we covered it right down here at the 25 level at 1625, where we went long, and unfortunately I got out at 1642, and then you can see the party left without me. I mean, I got some of the party yesterday, but they'll leave a big chunk of it on the table. But this is nothing more. This rally here is similar to this rally right here. Look how fast it took off. Just because it goes up $100, I mean, it can go right up to here and come right back down again. So, that's why, I'm a technician and not a fundamentalist, and the problem is on days like election day, and it's actually fun for me to stay up tonight, folks. I think I'll have a pretty good evening trading. I'm not going to be trading a lot. I'll be waiting to see the best shots that I can get, and I'll try to pick 2 or 3 places based on what the news is going on, and then I want to see how the market reacts to those news. But the patterns are what makes me stay in this business, and that's what I live by, folks. I might listen to what I'm saying to myself, but the patterns are what I really pay attention to, because that means that we've been waiting for this rally here in silver. Look at this rally in silver that we've had, folks. We've rallied $3 an ounce in silver. Can you believe that in just this short period of time? We've gone from 17 to almost 22, $3.50. And this is why the coin dealers and people in the coin business, they don't have any silver rounds to sell. Somebody's been buying these darn things up. They've got here in Tucson, there's a 50% premium to buy a silver round. In other words, right now it's probably $25, and they're going to charge you $15 to $20 to buy that coin. I mean, they're beautiful coins, but they're not worth that much of a premium. So let's pay attention to that. I think it's very, very important that we keep that in mind. Okay, I think that's the main thing that I wanted to cover today. I had one other chart that I wanted to share with you, and I'll be giving it back to you in just a second. That's this one right here. But this one was very interesting because this comes from our friend over in the UK, and this worked really good, folks, but I wanted to bring this out to your attention. This was early this morning. Now, early this morning, the NASDAQ had rallied up to exactly the 382 right here, okay? And it backed off 120 points, folks. That's $2,500. It stayed there for a little bit, and then it went up higher. So remember, if it gets there and it comes down, was 120 points down, which is $2,400. And if you don't at least protect some of that, you shouldn't be trading, because if you make 2,400 and it goes to a loss, there's something wrong with that. That's not good trading. And believe me, I try to prevent that from happening. Unfortunately, it's not always the case, but anyway, that's what we're watching here, because what we've done now is we've come all the way up to this level right here, which is the 61% retracement in the NASDAQ. But those numbers will change today and overnight because of the fact that we're looking at an election. It's going to be extremely, extremely emotional, that's for sure. Oh, my goodness, look at crude oil, folks. Shut the front door and raise the rent. Color me happy. This thing is working good now. Let me get this up here today. If you like 382, and I do, let's get this up here so the folks can take a quick look at this today, because it's looking good so far, Billy Ray, and we'll see what's happening. That makes up a little bit of the sting of not being in silver. Well, I'm in silver, but cash silver. Anyway, you'll see we've broken really hard now, and we're going to make the ABCD on this, but that was the one that we focused on today. That was the two trades of the day were to buy the bonds. They didn't get to where we wanted to buy them, and they took off, but the crude oil was perfect. It hit the 382 exactamundo, and then it's broken down, and that means it's going to go probably another $1 because the ABCD on this is down about $1 lower. So let's take a break, and we'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, just for kicks and giggles, I put up the E-mini chart. If you remember, I posted a little while ago when we were making the 1.618 expansion of the previous day's range up there at the 1.618 expansion when it was at 38.80. But here's the thing that you want to mention, folks, here, or to pay attention to, hey, from a chart standpoint, okay, forget the election. You'll notice that 382 retracement that was right here. There's your 382 retracement of the low we made 3 days ago. Now, if you measure that, you measure A, B, C, and D, it's going to take you right up here. So this is what I think our overnight high might be here in the E-mini S&P. That's at around that 38, I think it's 39. No, it's 38.70. Oh my goodness, did it already hit? No, 30, it's 38. Oh, let me double check it, folks. Hang on here. Don't want to mess with it. It comes in at 38.80, and so far we've been to 37.60. So watch 38.80. That's the one to watch right now. But, since we're doing it and we've got just a second to do this, I can add this to. I want to add the ABCD in it so that you'll be able to see it also. So you see, I don't just make this stuff up. This is going to be interesting, boys and girls. This is going to be interesting. So let's get it up here so we can all take a quick look at it. And here is the ABCD that we're looking at. We might have already made it. You see, we're within about 8 points. So that ABCD could have been completed, but it says a little bit higher. So watch 3880, and we'll talk about it tomorrow. And if I'm wrong, I'll have some more humble pie. I seem to eat more humble pie these days than I've eaten in a long time, but I actually enjoy it as long as it's sugar-free. Light crust, of course. Anyway, live every day in an attitude of gratitude, and may God bless. Remember, our guest tomorrow will be Shane Smullian, thewolftrader.com. Thursday, we got Tim Boss, Financial Cycles Weekly. Stay on the green side of the grass and live every day in an attitude of gratitude, and may God bless.
Building wealth